you wondering how much house you can afford based on your current salary? Well, watch this video until the end because I'm going to help provide a full breakdown on the numbers that you can calculate at home based on how much you make, and also show you what lenders look for when qualifying for a mortgage. Well, let's get right into it. So how do lenders qualify you for a mortgage? In this example, I'm going to use someone that makes, say, $60,000 as their median income a year. $60,000 is your gross income. That's before any taxes or deductions, right? So $60,000 on average of 12 months is equivalent to $5,000 a month. So that $5,000 a month is the number that I want you to keep in mind on what we use. Now, lenders use an acronym called DTI, short for debt to income ratio. So we also have to understand and know how much other debt you currently carry, whether they're student loans, reporting to your credit bureau, you have a car payment, credit card debt, personal loans, right? So with this example, just to keep it clean, let's just assume you don't have any debt, because what I want you to know is the max payment you're allowed to make from that $5,000 income a month is 50%. That's your max debt to income ratio when qualifying for a conventional loan. Now, there's other loan programs available that will allow for higher, but again, just for this example, we're going to assume you're qualifying for a conventional loan. So back to that $5,000 a month, I have a home that is listed for $289,900. I want to show you the breakdown on what the principal interest payments would be, including the taxes, the homeowner's insurance, and understand that based on that payment, you would actually be able to pick that up as a starter home, for example, based on your current income. Okay, so let's go right into it. In this example, this house is listed for $289,900. That's before any negotiations. In our current market that we're experiencing, where buyers are more favorable, you can take advantage of seller credits. Not to mention there's down payment assistance to help you with closing costs, but we'll get into that. So this is a 3-bedroom, 2-bath home. I think it's very ideal for someone starting out, picking up their first property. And here is how you would look at the principal, interest, tax, insurance payments that we talked about. So here, the payments, assuming that you have credit scores of 740 and above, you're buying this as a primary residence on a 30-year fix, you would qualify for an interest rate of 6%. What does that mean now broken down? The principal and interest payments come out to $1,686. The property taxes on this home is about $58. Homeowner's insurance is very subjective. I'm going to call it $50. And then there's mortgage insurance, which is also known as PMI, private mortgage insurance. That's always assessed on a mortgage when you're not putting down more than 20%. Okay, so that totals out to $1,914. I'm rounding up. So let's just call it a sweet even $2,000, right? For easy math. If you take $2,000, that's your liability, your debt, and divide that by $5,000, that should give you a debt to income ratio on the back end of 40%, which means you have met the threshold allowed, which is that 50% that I mentioned earlier. So then in this case, this is why I feel that someone that makes, say, $60,000 a year should be able to qualify for roughly a $300,000 home. And here's why. $60,000 gross minus any taxes should give you about $49,000 in net income. Divide that over a 12-year period, that should give you roughly about $4,100 a month of income to use. So yes, I know there's, car payments, insurance, utilities, food, expenses. That is going to vary based on every individual, and how you budget that is really on that's on you. But I want you to understand, of that $4,000, you should be able to qualify or afford a home that has a payment of $2,000. And that's not to mention being a starter home, maybe you do have a roommate and you'll be receiving rent from those roommates, which, by the way, if you are interested to learn about how you can actually use rental income from your roommates to qualify for a mortgage, be sure to check out my playlist or this video on how you can do that. But nonetheless, this is what I want you to understand, that based on the salary, your credit, all of that, you should be able to qualify for a $300,000 house. Now, this home is located in Nevada. That's not to say if you're shopping in other markets that this doesn't apply. But if you do have a scenario that you would be interested in running, be sure to send me an email and I can hop on the phone with you to go over that in more detail. But, some of the things, that you may be thinking about is, well, my salary isn't quite there yet. That's okay. Maybe you can start preparing yourself for a raise, right? 2, your credit score needs some improvement. That's okay. 740 is ideal on what I use to qualify this scenario. Conventional loans require a minimum of 620. FHA financing has a even much lower qualification, so don't let that deter you. And again, that's why everyone's scenario is different. So hopefully you reaching out to me and us going over that, taking a full application, will help us really identify where we can help improve or even move forward with, a loan approval at this time. And then thirdly, it might be because you feel you don't have enough cash to close. I didn't share with you guys, actually in this scenario, the cash to close for this size loan of a $289,000 900 purchase using 3% down would make your cash to close that would cover any closing costs, down payment, prepaids, title fees, things of that nature, a little bit shy of $13,000. Now you're saying, Candy, I don't have $13,000. That's okay. There's down payment assistance programs that will pay you anywhere from 3 to 6% to help you towards your closing costs and down payment. And then again, I stress about that seller's credit. Maybe in your market, you're seeing homes kind of sit a little bit longer than the usual 30, 60 days. That's where you'll be able to be a little creative and negotiate any seller credits, which I also have another video as well to check out if you want to use that towards your negotiation. If those are the things that you feel are holding you back from purchasing your first home, I want you to just understand that this is how you can see whether or not you qualify based on maybe someone that makes $45,000 a year, $50,000. There are ways, and I don't want that to stop you from saying that home ownership is not within reach. So if you find yourself in this situation where you're wanting to purchase a home and don't know how to get started, be sure to send me an email or call me at the information below so that we can walk through a full credit application and go over a situation very similar so we can get you started. And if you haven't already, be sure to hit that subscribe button and the bell. Thanks so much for tuning in today, guys. I'll see you on the next one.